Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a one-year daily candle chart of the S&P 500 ETF, ticker symbol SPY. It's also known as the spiders, and as I zoom in here to the chart, you'll see that I left my lines on the candle charts from last week, showing right here that we would most likely pull back to the moving average. And as I zoom in there, you can see that today's low touched that moving average. We hit my target. But interestingly enough, while this may look like a hammer pattern right there on that moving average, notice the increase in volume down here on the volume bars. Now, normally, if I was only looking at the candle being that long shadow underneath, I would say we would most likely bounce. And there is that possibility we can go up to fill that gap. But down below, the stochastics is crossing with a sell signal today. Yesterday, the CCI crossed with a sell signal. And today, as I record this on the 15th of January, it looks as though the CCI is getting ready to cross below the zero line, aka the momentum line. So what does that mean? Well, I'm going to erase all these lines right now and forecast that we could very well be on our way to test this support level from the lows on that bearish engulfing pattern back on the 4th of January. So I'm just going to forecast out just like that, looking to the left but drawing to the right. I'll do that. So I'm trying to pick up on some of these angles here, and just moving that on over. So my price target is going to be 365.85 on the spiders. And what that means is if you're long any of the S&P stocks, you might want to think about risk management. If I'm wrong and instead it bounces, well, at least you have your stop in place. And that'll help you sleep well at night. Now, if we look at the VIX, which for the most part is inversely related to S&P, I have my forecast lines here as well. I said we would most likely go down to test this support level. We did that. And as I zoom in there, you'll see that the end of my line right here is the target. And today we hit that target and formed a long shadow above. Now, again, this is acting inversely to what we saw on the spiders. So at first glance, you might think, oh, that's going to move lower. But look at the oscillators. Today on the VIX, we crossed over that momentum line. So I'm going to continue on with this one to test the resistance here. Again, my price target on the VIX short term is 27.76. For those option traders out there, that gives you enough room to position yourself for a rally. But again, if it breaks out below that support level, time to get out. Manage risk. Again, if I'm wrong, and that's more often than you might think, if I'm wrong 20% of the time, then you have to prepare for that because the charts are never 100% right. But right now, as the evidence is leaning to the buy side on the VIX, that would be bearish for the overall market. That's the VIX. Now, if we look at the diamonds, see the same thing here. We saw a pullback on the diamonds. We ended the week with a red candle overall. The end of the line right there was 306.93. We hit that absolutely on target today. And again, look at the oscillators down here. On the way down, notice how the volume is increasing on the way down. And again, if we were only looking at the candle, I would say, yeah, we could bounce and then pull back. But that momentum is shifting. And next Monday, we have a holiday, markets are closed, so we have a shortened trading week next week with a lot of activity in DC. We really don't know what's going to happen, so I always talk about these charts as being one of the best risk management tools that you can get your hands on. So if you decide to stay long, I would strongly suggest you put your stop somewhere below the moving average. But for my forecast, I'm going to say we're going to go all the way down here to test this support level. I'm going to erase this even though we hit the target, and I'm going to forecast lower just like that. Not all the way down to that support level, but far down enough to where the price target there is 301.32. Now, again, that is a expected pullback. As long as the volume is increasing on the way down, that remains bearish. Now, let's look at the Qs. Tech sector, a little bit different. Had a lot of activity there. Again, we hit my price target. I said we would move up a little bit and then pull back. That's exactly what happened. But unlike the other markets, look what's happening more closely. We have a close below that 20-period moving average on higher volume. So for the Qs, I'm expecting it to go down to test this support level right here. And I'll give you that price target for the Qs being 306.53 for our option traders who are along the put spread that we put out last week. You're probably happy to hear that because we will be making money on the way down with that particular spread. And if you're not an option trader and would like to learn how to trade, I'll leave some links at the bottom of the page here so you can inquire about that and learn more about how we put out our trade alerts. So that's for the Qs. And then what do we have is the IWM, which is the Russell 2000. This is a small cap index. Did not pull back and fill the target, at least not yet. Look what's happening here right at the top. I'm going to erase this and then redraw so you can see how I'm picking my price targets. IWM still has a gap below the market there. Notice right here, higher low, higher low, higher low, higher low. Uh-oh, lower low today, followed by a lower high. This signals an official pivot point right there on higher volume as the oscillators are rolling over. With this one down here, as I magnify that, that's the CCI crossing officially with a sell signal today. So I still think the IWM is going to pull back just like that, looking to the left, drawing to the right. I think the price target there is going to be 198.16. Now again, it's all about risk management. Talk about that almost every week. And in our coaching calls with our clients, I always talk about risk management. Setting goals properly, of course, is important. But if you're not managing risk during the times when the market goes against you, then more or less you're setting yourself up to eventually take a catastrophic hit. And we don't want that to happen, of course. So stay tuned. We will talk to you week to week, and you have a great day. Bye-bye.